Hey guys, this is Adam. Welcome back to the channel, and this is a new episode of your comfort show with Adam Trades. Oh, I'm sorry about that. I was a little bit cheesy. Just kidding. So, let's get straight away into the business. In the previous episode, we covered a trade review for my execution that was taken on Monday, the beginning of the week, which was the first day of the week, which was the first week of the month, and that is the NFP non-farm payroll. And today we will be covering a trade executions in the Tuesday afternoon session for the current week. The trade that you're seeing here was framed on the idea that we have taken buy-side liquidity, and we've also tapped into the low and fell short of the lower quadrant of a 15-minute SIBI. I was a little bit too impatient. I should have waited for a market structure shift by taking out the swing low, but I was impatient, so it is what it is. You will see me get stopped out and mitigate the loss later in the video, so stay with me. If the up close candle is a bearish order block, it should respect the mean threshold of it, but definitely, I was wrong. And the stop loss was hit. And now looking at the price, we can see that it's starting to respect the busy and treat it as support. We can see the opening price of the up close candle is respecting the high of the fair value gap. That was the fair value gap on the 15-minute time frame that I was outlining. It was a little bit tricky here. You will see me entering long. Nice reaction off of the CIVI. Yeah, long position here. Stop loss below the low of the fair value gap. And as you can see, there was no unnecessary risk invited here. The previous trade, I was risking $83, which is less than 1%, assuming that I'm using a 10K account. And here I'm risking 33 and a half or $34 per trade. Not even half a percent. And I'm aiming for the high of the fair value gap, and we will take partials off at the consequent encouragement. Honestly speaking, guys, I'm not gonna lie. Holding on to long positions is a struggle for me. I don't like long positions. I don't know why, but I have some hard time like trusting it. Like I do trust getting into a short position and holding on to it. But when it comes to long ones, it's a nightmare. Maybe it's something that's gonna like you know, get better over time. Now I decided to take one off. We're showing initial rejection from the lower quadrant, and we are tapping one more time into the opening price of the bullish order block, which is the down close candle. I really hate getting into long positions. I don't like them at all. Especially in these type of conditions where price tend to get a little bit sloppy, and it was not like delivering fast as it should be, because you know it's NFP. So this is the type of price action that you should expect on these type of days. Keeping risk low. Stop loss is placed to cover fees and commissions. One more position added. And as you can see, the risk is not even exceeding 1/3 of 1%. Keeping risk low is key, especially when you're trying to mitigate a loss that was already taken. You should not be inviting any type of unnecessary risk in these type of conditions. Even though I'm trading the PM session, I gotta be careful with it. Keep in mind, guys, that we are getting into a extra premium area, so there is absolutely no need to elevate your risk level. I'm afraid that you can hear my background noise, if you can hear that, so sorry about that. Yeah, that was me cracking my fingers. So instead of taking 2 contracts off at the consequent encouragement, I decided to take one off as it takes the buy side liquidity of the swing high, and to take another one off as it touches the consequent encouragement, and I just decided to place the sell limit just right below the consequent encouragement to like afford myself an exit, because I'm not sure, maybe it could touch the consequent encouragement and stop me out immediately like a turtle soup. But be mindful of that, the fact that we have a bearish order block opening price above the SIBI, which is outlined in the pink shaded area. Here we go. Yeah, can you see the red line outlined on the top of the SIBI? That is the opening price of the bearish order block. Here we go. trailing my stop loss below the low of the CB. And I'm expecting price to not come back all the way down below the order block. That was I was expecting initially. We're seeing price coming back to the CB. Stop me out in profit. In these type of days, like non-farm payroll, FOMC, it's almost impossible to be profitable without taking partials. Man, I've learned a lot from Inner Circuit Trader. This guy's a gym. You can find all of these information on his YouTube channel, by the way. And my personal recommendation is the 2024 mentorship. I've said that in the previous episode, and yeah. And for clarity's sake, that trade was taken on a paper trading account, so I'm not enticing you or forcing you to take any type of trades or to do anything with your life funds. So that was conducted in a protected environment. Now we're seeing if we can get a little bit of extra juice, placing the stop loss at the main threshold of the bearish order block, and a partial should be taken as it taps into the opening price of the order block. But in these types of environments, you should be affording yourself an exit because you have no idea what price is going to do in the next few minutes. That's why I placed my partial to be taken off as soon as it taps into the high of the CB. And me personally, I do not trust the bull flag pattern that you see here. Like, you see the bull flag pattern which is forming, giving you the idea that we're in an uptrend, and it's basically a trap for the retail. Take 2/3 off as it touches the sell limit order, and in case it runs all the way up to the main threshold, that's pretty much pretty good for one contract. Don't want to be like too desperate to get it. I decided to place a limit order on the upper quadrant of the CB. Take one off, and one contract to be taken off as soon as it touches the high of the CB. Because at this time we have no idea if it's going to touch the opening price of the order block, go straight away to the mean threshold, or roll all the way down as soon as it touches the upper quadrant of the CB. We're in a very, very premium area. We want to see it respect the mean threshold of the order block as it did here. It did trade to the low of it, but it was only the wick. But look at the bodies. So far so good. Stop loss was trailed to break even or cover the commissions and fees. I was trying to get like every single bit of juice from this trade. Stop loss was placed in such position to take me out, or I'm going to end up in profit anyways, but I was holding on the trade to see if we can get up to the mean threshold of the euro block. Technically, this is the best case scenario. That's me being dumb. Simply. We're looking to see if the busy has the ability to trade to act as a inversion fair value gap. I'm sorry, we're seeing if it has the ability to send lower prices, and you will see it roll over all the way down and stop me out. That was close. Look how the bodies are respecting the opening price of the euro block. I should have been mindful about it. But anyways, since this fair value gap has already been inverted, I was waiting to see if price has the ability to leave it, come back and touch it, so I can enter the trade on a short position using a limit order. But you will see price did not even come back to it, and it rallies all the way down. But any attempt to chase price, or excuse me, any attempt to enter the market on a market execution in this type of move, it should be nothing but chasing price. I was looking to see if it has the ability to give us some sort of reaction as soon as it touches the low of the SIBI, come back all the way up, trigger my limit order and trip me in, but it didn't afford me an entry. And you can see how smooth is the relative equal lows, just right above the midnight opening price. really love my watermark. What do you think? I should have made it a little bit bold and fat. I was waiting to see if it has the ability to treat this orange box as an inversion for value gap, or at least come back to the low of this CB. That was 335, so it was like go, 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 go. We don't have enough time. I was waiting for any type of retracement that it could trust, and here I was measuring the equilibrium of the trading range to see where my entry could be framed. And here I was looking for a optimum trade entry. These two up close candles, if we leave them and come back to the higher one, specifically the opening price of the higher one, I would enter short. That would be treated as a order block. Stop loss was placed above the mean threshold, and I was targeting the opposing liquidity. Partial profits will be taken at the relative equal lows that was formed right after 145, and the terminus is framed on the idea of having a fair value gap that was formed after 130 in the afternoon. That was a really, really nice trade. I like the fact that I didn't chase price by any means. It was little to zero drawdown before it takes off. We can see that price is using the opening range gap high as a resistance. And the regular trading hours previous settlement price is the opening range gap low from the morning session. And the level that is outlined with the red line of the Fibonacci is the consequent encouragement of the opening range gap. That was a beautiful area for a pyramid. If it comes back all the way up to the euro block, touch the opening price, or afford us a reaction from this tiny fair value gap, all of that is permissible. Nice reaction off of the fair value gap. That was the better area for pyramiding or adding more positions to the existing position. But be mindful of the fact that we are in non-farm payroll, so there is no need to invite unnecessary risk. Beautiful delivery. you will see it smash my buy limit and the take profit. I hate motorcycles. So loud. See that? Beautiful, isn't it? Drawing a stop loss to cover the fees and commissions. So if it reverse all the way up, won't be taking anything from me. And here we go. Take profit hit. By the way, guys, you might have noticed that I might call something incorrectly, like calling a busy as a sibby. I might have said a stop loss instead of take profit. This is because of the fact that I'm fasting. It's Ramadan here, and I haven't eaten shit throughout the day. I haven't drank any water, so maybe I'm a little bit unfocused, and also I'm working without a script. Just saying straight away what comes into my mind. So excuse me if I said something correctly. I'm a human. I make mistakes, and that's okay. Thank you guys for watching, and looking forward to talking to you next time. Thank you. Have a great day.